So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Hey, everybody, and welcome to the Capital Gains Tax Solutions podcast, where we believe that most high net worth individuals and their professional teams struggle to help find great capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven strategy such as the Deferred Sales Trust is the best way to exit your highly appreciated assets tax deferred so you can create and preserve more wealth. I'm your co-host, Pearson York, filling in for Brett Schwartz. And each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world, where we share ideas, deal stories, inspiration. And so together we can make complex tax deferral strategies simple and passive income plans achievable. We're streaming on Expert Secrets CRE podcast, the Capital Gains Tax Solutions podcast YouTube channel, the Kingdom Luxury Realty YouTube channel, and the Kingdom Luxury Facebook channel. Our next guest, I'm very excited to have a conversation with. We were talking a little bit before the show, and he is amazing. He's been a real estate broker in the New Jersey area for quite some time now, and he is joined up with a brokerage that has some pretty unique strategies. And so we're very excited to dive in. I want to introduce Sunil Chillar. How are you, bud?
Not a problem. Hi, how are you? It's a pleasure to be on your broadcast today.
I'm good. Yeah. So before we dive in, tell us a little bit about your story, how you got to where you are, and the background.
Sure. Background. It's been an interesting background. I actually came from the financial world where I traded securities, and at the same time, I was a associate vice president with a major financial company here in New Jersey.
Okay.
Little side story to that. In my 20s, that was my previous world. That was my life. I ended up going to a Tony Robbins seminar, walked on fire, night number one, walked back to work the following week and gave my resignation and never looked back.
Nice. Okay. So basically Tony Robbins changed your life. That's what it sounds like.
Absolutely. It's awesome. Just a mind shift.
Yeah. Interesting. Okay. So before we dive in and unpack your story a little bit, I want to take you back a little bit more and tell me, I believe everyone has either gifts or superpowers. I call them spiritual gifts. Other people call them strengths or superpowers or whatever. What are 2 or 3 of your superpowers that have made you successful today?
I guess one of my superpowers is initially as a kid coming to this country, as immigrants, one of the things we did, or I did, worked on the streets and worked in factories. And I've said to myself, you know what? I never want to be here again. I never want to do this again in my life. And it scares the hell out of me to go back there, God forbid. So what did I need to do different? Obviously, I'm a kid. There's not much I could do at that point in time. But growing up, I needed to learn how to develop myself, how to train myself, how to be better. And like I said, I went to that Tony Robbins event, and it was a major mind shift, where everything that I do, I push myself and I drive myself to extremes, if you will, sometimes, just to do better. And through time, I've been very successful with real estate. I've bought many properties that I own throughout the country, and I teach my guys how to invest. So it's not just, I own a real estate company and come in here and get a commission. I actually show them, and some of them do invest with me on different properties. Awesome. So that's why I am.
Awesome. So the strength then, or the superpower, is just the drive that you've just learned from the humble beginnings that you never want to go back. And that's really what pushed you.
Yep. I had someone, back maybe 20 years ago, you talk about pay it forward. This guy sort of took me under his wings, taught me the foreclosure, bankruptcy world, all that great stuff. And I just basically blew that out of the waters at this point in time.
Yeah, so, absolutely.
I love the fact helping people, showing them how to make money, and just help people overall.
Yeah, absolutely. Okay, cool. So what was the one or two like golden nuggets you took away from this Tony Robbins conference that really made that mind shift?
Yeah, you know what? Growing up, conservative. When you have X amount of dollars, that's what you spend. You don't buy more than your means allow you to. So that's how we all grew up, right? Yep. So the major shift here was, well, if I don't have the money to buy what I want to buy, what do I need to do today to have that money in order to make that purchase? We look at, let's say, a 200 unit. We just were involved in something a year ago, $16.5 million deal. If I did not have that mind shift, could I ever say to myself, wow, I would love to spend $16.5 million? Which ordinary Joe will do that? Yeah. No one. So the question, and the mind shift is, what do we need to do today in order to obtain that piece of property? So it's mind shift and being surrounded with people who knows the business, who could guide you. Yeah. Just trusted advisors as well.
Absolutely. Okay. So the mind shift was basically, how do I set myself up for success, or how do I do things today that will put me in a place to act in the future?
Correct. Because everything I've done, and this is how I think people should think, because you know what, we all getting older, right?
Yeah.
What we do today, the seeds we plant today, we'll reap tomorrow.
Yep. Oh, your audio cut out a little bit. Your audio cut out.
Oh, I'm sorry. The day's going to come where we want more. So we need to plant those seeds today.
Yeah, absolutely. Okay, cool. So tell me a little bit about Exit Realty Urban Living. Sure. What is it? How'd you formulate it?
Exit is a franchise. It's probably one of the best things that I've come across and I've done in my life. I've always wanted to help people, like I'd mentioned to you, to make money, to be successful. And, in my research to open a company, I've spoken to many brands out there. And one of the things that I love with this particular company is that from corporate, from all the way up to all the way down, everyone just bends backward, just trying to help you. And it's that culture that this whole company revolves around. I couldn't see myself going anywhere else.
Yeah. Okay. So the servant leadership attributes of the company is kind of what you feel like is creating this culture that you just are super attracted to.
Absolutely. It's just so family oriented, and just the willingness to help someone else prosper. So I love that.
Awesome. So what kind of assets are you currently going after and investing in right now? What's your crystal ball telling you over there?
We are blessed. I guess that's the right word. We are blessed that on our team, we have a demographer. Okay. So what that entails is basically we follow the path of progress. So we know where that progress, where growth is taking place, where companies are moving to, where progress is about to happen, and we plant our flag there. So what we typically look to buy is 80 units and up, 80 doors and up, in different markets. Now, one of the things we look at is we love buying mismanaged properties.
Of course.
Obviously, anything we look at must have a value add. So the play is basically hold the property for 3 to 5 years, raise the value, raise the NOI of the property. While doing that, you actually have a safer environment for the tenants, because it's twofold. Number one, on the money side, your investors are reaping the benefits, correct?
Yep.
On the flip side, you have tenants. They too, as a person, as a human, they too should reap those benefits. And how is that done? Sometimes, you know what, you need to fence the property depending on location, and just added security. In the units themselves, maybe change the carpet to vinyl planks, or change the hardware, change the countertops. Small changes, paint the unit. It doesn't take a lot to make someone happy and to make their home more presentable. So when they come home, they're happy customers.
Yeah, absolutely. So what areas are you currently going after? What markets?
The Texas market.
Yeah.
The Texas market today is just super hot. We were looking right now at a 92 unit in Killeen, Texas. At the same token, the other markets would be Georgia, the Carolinas, Virginia, Florida. Florida is also a hot market. Yeah. So, we are with the masses to a degree.
I didn't hear California.
And you will not.
Fair enough. Okay. So basically just the hot markets that we kind of have been hearing a little bit around. Don't stray. Just don't try and get cute with it. Just go get in the hot market. Is that fair?
Correct.
Awesome.
Correct.
Okay.
We're not here to reinvent the wheel.
Yeah, definitely. So your guys' strategy is to buy distressed, mismanaged assets, obviously put some capital into it, right? Put some management, decrease the management inefficiencies, and then go ahead and flip it in 3 to 5 years. So how are you handling the exit with the capital gains tax?
The exit strategy or exit realty?
Oh, yeah, that's a good point. The exit strategy. So you sell the property, right? And you I'm assuming you probably syndicate a lot of these deals.
Correct. We do a whole lot of syndications. One of the things that's beneficial to our investors would be cost segregation.
Of course.
The funny thing is, not a lot of people, and this is what attracts investors. It typically takes about 27.5 years to depreciate your home. And with these type of investments, with these assets, you're able to depreciate it in year number 1. So we pass those depreciation benefits to our investors. So from a tax consequence, they're really reaping the benefits here.
Yep.
So our investors, number one, love that. And, the only thing we love to hear from our investors is, what next? Where can I park my money next?
Yeah, absolutely. So you guys will acquire property, right? You'll add the value, do some improvements. You'll do a cost seg study, pass that along to your investors.
Correct.
What happens when you sell?
Well, when we sell, we start to rinse and repeat.
Yeah.
Just a process all over. One of the other things that I should also mention with respect to cost seg is 1031 exchanges. Mm-hmm. Obviously, these things have been around, and the investors just eat this up. It's just a way of kicking the can down the road when it comes to taxes.
Of course.
We also, what was funny, and not a lot of people, although it's been around, really don't tend to use it, which is Deferred Sales Trust.
Yep.
DSTs. So we have started working with those as well. But for the most part, 1031 exchanges, we do have a lot of those in play right now.
So why would you guys use a deferred sales trust over a
1031?
1031? Yeah.
With a 1031 exchange, you have that certain amount of time period before you could deploy those monies, or Uncle Sam will be having that conversation with you, right?
Yeah.
The difference with a 1031 versus a DST is you do not have that time constraint anymore. So once there's that intermediary, that holds on to that money and that does not touch your account, you're safe. Now, in addition to that, with the DSTs, let's make the assumption right now, the property was sold and the profits to you as an investor, let's use nice round numbers, $1 million.
Yep. So
you made $1 million profit. It's in a DST. Let's make the assumption that, you needed cash and you wanted $200,000. Mm-hmm. You could actually, in an installment contract, you could actually get that $200,000. Obviously, you'll pay taxes on it. Mm-hmm. However, the $800,000 that's still sitting there sits there tax-free.
Yep.
So that's the major benefit from a 1031 versus a DST.
Yeah, nice. What's also interesting is that with the DST, you can invest it agnostically across different asset classes.
Absolutely.
So it's sitting there and it's growing as you put it into things like stocks and bonds, and when the time is right, you can put it back into real estate, which is what I love about it. So do you guys turn away a lot of 1031 investors who are doing coming off an exchange and trying to roll it into one of your syndications?
It depends.
Yeah.
It depends, right?
On the amount, right?
Absolutely. It depends on the amount. It depends where we are with the deal. Again, we at times we'll tell our investors, when the next deal comes, we'll have you, put the money, invest the money there. So it's funny, that depends word, but we tend to use that a lot.
Yeah, it is tricky because it really does depend. It's a pain in the butt to try and do a 1031 into a syndication. A lot of more paperwork and stuff, and
absolutely.
A lot of people don't want to do it.
Well, even the cost to do the PPM documents is more.
Yeah.
I'm not sure if people are aware of that, but there's a cost.
Yeah. How significant is that cost compared to, just...
It's about $10,000, but when it's your $10,000,
yeah,
it's your cost.
Yeah, absolutely. Okay. So we were talking a little bit before the show, and you mentioned a couple other things. You mentioned cost segs and your exit realty brokerage. But I also want to kind of dive into your team a little bit, because you mentioned you have a demographer on your team. Was that by design, or was that just like all of a sudden you found a shiny object and you're like, this is useful?
That actually was by design.
Yeah.
Yeah.
I'm
sorry, go ahead.
No, go ahead.
In addition to him, one of the team members, she herself is a property manager in the Texas area. She herself owns over 6,000 units. Wow. So she is a part of the GP team, which just makes things easier. We do not self-manage. We will never self-manage. I don't care who you are. I do not want to be getting those calls. My job should be managing my managers. Yep. That's what my goal should be. Obviously you want to have conversations with your investors, have that relationship grow. So you do have investor relations as well. Let them know, bring them up to speed on certain things. But yeah, don't self-manage. We have seen and we have bought properties from others where people who self-manage tend to lose the property, or the property becomes mismanaged.
Yeah. Definitely. So finding those self-managers is probably a nice hot ticket item for you guys.
Yeah, it is.
And speaking of that, where are you guys currently finding deals?
At this stage, I actually have brokers throughout the country who would call me because I've built a relationship, who would just call me and say, hey, I have this or I have this. And obviously we'll always look at it and underwrite it and make sure it makes sense for us. So we do take a conservative underwriting look at things because, as we know, there's still a lot of uncertainty, especially now
Yeah,
with what's going on in the world. So we are just super careful.
How has the world events kind of changed your guys' underwriting and the deal flow that you guys are seeing?
We tend to pad our underwriting just to protect ourselves from.
Of course.
That's how we work. I'm sure others do the same. We haven't seen much of a change yet. It's like, waiting for the other shoe to drop.
Yeah.
So we are being careful.
Definitely. Okay. But as far as like the actual like deals and prices and all that kind of stuff, nothing has really materialized from the rumors.
Prices have definitely gone up. There's competition galore. One of the other, the big boys, the BlackRock and those big boys, they would come out and buy properties at a 2 cap. How do you compete? How do you make money to begin with?
Yeah,
so that's our competition. Obviously we don't have their money.
Yeah.
Yeah. So that's really our competition. And and the sellers obviously know what's going on. So it's just a continuous game or dance that we all dance with each other.
Yeah, definitely. I mean, it is just a super competitive, environment. Everyone's kind of saying the same thing, like, and all the cap rates are compressing and, people at some point are just like, they don't make any sense.
Correct.
So that's another reason why the DST is such a great alternative, is because that time freedom that you have, that you don't have to worry about that. You can go in. We had a guy in 2006 had a 20 million unit apartment complex, $20 million apartment complex. It's like 100 and something units across from the Minnesota Vikings stadium. He ended up like selling it in 2006, deferred like $3 million plus in tax, paid off all of his debt, put it into super conservative bonds and mutual funds, like 4.5%. He gets a call from the bank back in 2012, and they're like, hey, that property you sold back in 2006? He's like, yeah. They're like, well, we're foreclosing on the guy who overbought that property with a 1031. You want to buy it back? He's like, well, how much is it? They're like, well, it's about 40% off what you sold it for. He's like, yeah, I'll do that. Partners with his trust and goes and rebuys the property back. And he got a brand new depreciation schedule. So he absolutely killed it. Now that's a rare story, of course, but I always tell people that story doesn't happen if you're not set up for success in the beginning, right? Like, what can you do today, in order to put yourself in the place to really reap the benefits tomorrow, right? So I really like that mindset shift that you had, and that was some good wisdom that you dropped on us. So I appreciate that.
The other thing that I've recognized and I've learned, and it's hopefully I say it correctly, but it's going to be hurtful for others as well. Back in 06, 07, when the market tanked, when the economy tanked, I bought properties pennies on the dollar. I bought like a pig, and you know what?
Yeah.
So I ate, and I held a lot of those for about 10 years or so. Market appreciated. I made a killing. So my point here, just like COVID is another, for me personally, God forbid a lot of people died from it, but on a personal note, COVID was the best thing that happened in my life. When there are these periods of time where calamity is taking place and the world just seems to be crumbling, people are making money.
Yeah.
And again, it's, I'm not taking advantage of anyone, but the fact of the matter is there's an opportunity for many to eat and make money, and I've done so. So what I would like to share is, in these times, people need to step up, and instead of being fearful of what may happen, obviously we don't want to step in financial landmines.
Right.
That's why you should always have a team, or you should have someone to guide you who have been there before. You need to move forward. Being scared or analysis paralysis, as they say, you can't. You'll never survive.
The YOLO millennials call it scared money don't make no money.
Okay, I like that. I'll steal that from you.
That's when they're throwing their life savings into AMC and Dogecoin, though, and it's just, who knows? It's crazy stuff. So, all right, well, Sunil, where can people find you?
I'll give you my number. I'll give my email. I've been in one position, which is, in real estate for 21 years.
Wow.
My number have been the same. So I'll give you my cell number, which is 201-954-0292. My email is pretty easy as well. My first name, last name @hotmail.com, which is Sunil Chillar @hotmail.com.
Awesome. All right. And if you guys want to learn more about the Deferred Sales Trust, you can visit capitalgainstaxsolutions.com. We also have a mastermind every Friday. Come ask questions, meet the team, the dream team, and get some information. There's a ton of information on our YouTube channel, and you guys can definitely find out more about that. They're a phenomenal tool. Sunil, you ready for the lightning round, my friend?
I'm getting scared here.
Don't be scared. It's simple.
Go right ahead.
All right. So what's your favorite book?
What's my favorite book? I actually just bought, oh my God. Let's continue. I'll come back to you on
Come
that.
back. Okay. What's your favorite leadership quote?
Oh, you're asking me hard questions here. That I was
Something from Tony Robbins. Throw it at me.
That I was not prepared for. I'll rephrase that question if you will, if I could.
I'd love to hear it.
Some of the people that I love listening to, and again, it's who plays in your head, right? Les Brown is one individual, obviously Tony Robbins. Some of these individuals is just constantly moving me and propelling me forward, and these are the guys that I play in my head.
Yeah.
Forgive me, I couldn't give you a quote right now.
No, it's all good. It's all good. To get some quotes to write down, whether you think you can, or you can't, you're right, or drop some Henry Ford or something. What are you most curious about right now?
What am I curious about? I've always worked hard, like we always have, and on just personal growth. I'm turning 50 this year.
You don't look 50.
I'm getting there, brother. Turning 50, and as much as I've accomplished what I've accomplished, I'm still not where I need to be. So as an individual, I always take a step back. I'm obviously far from where I first started,
right,
which is a good thing. But just from a personal growth perspective, it kills me that I'm not where I should be.
That's funny. Okay, so basically you are on the never-ending personal growth track, and you're just not far enough down yet.
Correct. One of the things that I'll tell you this, that I do with my office, with new people, any new one coming to my office, I always tell them, listen, I'm going to make you uncomfortable. Now, what does that mean? I'm going to push you out of your comfort zone, because I always push me out of my comfort zone. One of the things that I'm doing, I'm scared of heights. I am dead scared of heights. I'm getting my pilot's license. And my wife knows it already. I'm getting my pilot's license, and I'm buying a plane this year to fly. Now, that's me. That's just me pushing me. So I'll push you. If you want to be successful, I'll push you also.
That's awesome. I really love that drive to make everyone around you better. It's fun. I thought you were going to say you're going to buy a skyscraper.
I'm not vain. I just want to plane.
Yeah, fair enough. Fair enough. Okay. So last question. Where's the market going?
Damn. I keep on missing the lottery by 6 digits. I'm the worst person to answer that question.
I ask everybody. I get the same response. My crystal ball's broken. I'm like, yeah, I know. I'm waiting for someone to just rattle it off. You know, I feel like if you ask enough people, someone will throw something at you. So
listen, for the last couple of years, the market we have all seen, there is this appreciation. You look at the stock market as well, it's on that same trajectory. Yeah. At some point, something's going to give, right?
It's got to, right?
Question is when,
right?
You know, are you prepared for it? Number one. And number two, are you sitting in cash to take advantage of that situation when it actually happens?
Yeah. So that's an interesting question. I'll kind of end up on this one. So like, how do you walk the balance between sitting in cash versus sitting in, you know, some illiquid assets, just given the fact that, I mean, you know, tomorrow it's going to be $950, you know, $1 million. You got the mortgage to fill up your gas tank, you know, so inflation's just like absolutely like eating away at those green dollars that are just sitting there. So how do you balance that? And what like allocation are you using for cash and assets and whatnot?
It's tough. And why I say that, you know, as much as I'd like to just maintain about maybe six months to a year reserve, it is tough because many a times doing what I do with respect to the multifamily or even, you know, stuff around the area, you find deals.
Right.
And I'm just the idiot, the hungry guy who's gonna chomp on it because, you know, I'm like a shark smelling blood in the water, right?
Yeah.
I'm going after it. And my wife is the one who keeps me in check, telling me no. So I guess someone has to.
Well, if you find some deals that you don't want, you can throw them my way. I'll take some deals.
Listen, I'll tell you this. I've bought in Jersey City for the last 21 years, like I mentioned to you. And I've done very well. Today, as of today, the 23rd of March, it is tough finding deals here in Jersey City. I find myself in Pennsylvania, 2 hours away from Jersey City.
Interesting.
I'm finding deals.
Yeah. I'm
making money. So you know what? What am I going to do? Cry about it or pivot?
Yep.
And go make money, you know? So it's a mindset again.
Yeah,
what
absolutely.
Do we do? You constantly got to change and you constantly got to, you know, figure it out. So that's what I'm doing. And that's why my wife always screams at me like, no, you're not buying this or you're not touching this. So that's where I am.
Definitely. All right. Well, thanks again, Sunil. And one more time, if you want to give the listeners your phone number and they can connect with you on your website as well, exitrealtyurbanliving.com.
Absolutely. Again, just, you know, please give me a call. I'd love to speak with each and every one of you. On my cell again, 201-954-0292.
Awesome. And you guys can find us at capitalgainstaxsolutions.com. You can also find me at kingdomluxuryrealty.com if you're in the Southern California coastal market. And that Deferred Sales Trust also works for primary residents, which is something that's, you know, very unique. So if you guys have a real fat capital gains tax on your primary home, you can use it for there. So give us a call, and we're excited to work with you guys. So Sunil, thanks again so much for your time, and thank you for just your wisdom. And we're just thankful that you got to come on the show and hang out with us for a few minutes. And is there any parting words you'd like to give the listeners?
Just find someone you could trust who have been there before, who could guide you. Because in this business, you could get crippled. Body shots come quick.
Yeah.
It's going to take you out.
Awesome. All right. Well, thanks again. And thanks everybody for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to grow and preserve your wealth. Please rate, review, subscribe. We love you guys, and we will see you on the next one. Have a good one.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.